jail's not that bad. It's
All views expressed by the hosts and guests in this podcast are solely their opinions and do not reflect the opinions of their respective employers. Guests and hosts may maintain positions in the assets discussed in this podcast. This podcast is for informational purposes only, and nothing in the podcast is intended to be financial, legal, or even life advice. GM folks, welcome back to More Than Speculation, your next favorite crypto podcast that you just heard about. So in today's episode, we are actually going to be doing things a bit differently. Last time it was just me and Lambros, but this time we have a special guest. I'm going to pass it on to you, Lambros, to speak a bit more about our
Hey, what's up, guys? So Blue from Trader Joe, Merchant Mo, of friends that I've been speaking for quite a bit of time. Very strong builder in DeFi, strong knowledge, understand both sides of things. I'll let him do a little bit more intro of himself, but glad to have you on today, Blue.
Yeah, thanks for having me. It's really good to chat with you both again. Just to introduce myself, I'm Blue, CMO of Trader Joe. I've worked in the space since 2021, so I joined Trader Joe just after they launched. I was doing a bit of DeFi degenning just before that, making my way into the industry. Really, I kind of fell on my feet and landed in this role. I've just kind of grown with the team. Basically joined the co-founders just after they launched. So I've been through a few cycles of DeFi activity, or just in general in crypto, working on the project side. And just happy to be here and chat some more.
Nice. Maybe for some of the readers that might not be familiar with Trader Joe and Merchant Mo, maybe you can do a quick intro, if you don't mind.
Yeah, for sure. So Trader Joe is a decentralized exchange. So users can come to our exchange. They could connect their wallet and just swap tokens easily and at low cost. And that's basically it. I can go into some more if you've got other types of questions. But our DEX is we started out obviously as a DEX. We kind of grew into this one-stop shop kind of offering. So we built a lending protocol. We built a novel kind of token launcher. We even went down the route of an NFT marketplace as well, which is called JoePegs. So, and now we're kind of in the process of almost like honing it back in and really doubling down on how you can make a great decentralized exchange. So, we at the back end of 2022, we launched a novel take on concentrated liquidity. That's a liquidity protocol. So users can obviously concentrate liquidity over fixed price points. For traders, they get really good rates when they're swapping across that type of liquidity. And now we just released our product roadmap to kind of see out the remainder of this year and early into next year. And I can talk about that more later perhaps, but we're focusing on building new types of DEX protocols on chain to really offer an amazing experience for traders.
Nice.
So right off the bat, before we get into the meat of the discussion, why chicken and why the name Trader Joe? Is there any insights from the founder, or were you involved in the creation of that? Because I feel like a lot of the time it's one of the more unique branding, right? Like everybody else was cat or dogs, and you guys decided to go with chicken. So yeah.
A chicken.
The farmer. Trader Joe,
the farmer. Yeah. You touched on it there, Marco. At that time, so middle 2021, the founders were they were involved just from a personal point of view, just being involved around certain DeFi ecosystems. And one of them had started to, work with other projects in the space as well, almost doing like side hustling as a dev. And they kind of quickly realized that actually a lot of their DEX experience was crap, like just really bad from a user perspective, lots of bugs everywhere, so difficult to use a lot of these exchanges, particularly on Avalanche at the time. There was something like 12 DEXs that had just basically started to spin up and operate. And so the founders kind of realized quite quickly that they could probably build an exchange that is free of simple stuff like bugs, but offers a better user experience that offers a different type of flavor as well. So, mostly DEXs back then were just Uniswap v2 protocol forks, but also Uniswap front end forks as well. So really kind of similar approach, and it was very much a builder's market back then. Almost everyone in founding teams were just devs, and kind of devoid of more established like marketers, even business development. It was really just a lot of devs building dexes or forking code that they could fork, and that's great. That's the sign of a nascent industry. But the co-founders kind of came in and they were like, okay, well, how can we do things differently to offer a better experience? And one of those, which has been probably our most important part of our kind of success story, was our brand approach. So and Marco, as you said, back then brands in 2021 were cats, dogs, food
And
items,
foods.
mythical mythical beasts, and all of this stuff. And it's actually like, what's really important for a brand when you're trying to break into what was still then considered a crowded market? How do you create noise? How do you penetrate users' attention and get some early traction? And positioning your brand is really important. One of the ways you can do that is just by offering a different visual identity. So with Trader Joe, with Trader Joe back then, the approach we took was, okay, well, there's a bunch of like items and animals and stuff as mascots. Well, why don't we just have a human mascot? Why don't we take a step forward to humanize the approach of our brand identity? It's different. No one else is doing it. And, equally on the user side, the speculation side, it was a lot of what people were doing on chain was really kind of almost, daunting. There was a lot of risk, a lot more risk involved. You've really got no idea who you're interacting with, and it's still largely kind of like that today, but you can probably trust protocols a bit more with their security. But back then it was even more daunting because a lot of the time, most people were, for the first time, bridging into new ecosystems. And they were struggling to get hold of anyone because a lot of teams were just, small dev teams and stuff like that. So actually having a humanized approach with a brand mascot was key to positioning against existing brands to create that early kind of noise and penetration to user attention, but also gain some trust. Just having a face that looks like someone you can kind of trust and communicate with is a really important part of helping to create that early connection with a user that visits your platform. A lot of these touch points are, just a few clicks. So just getting someone's face, even if it is an illustration, during those touch points, it's just been key to our kind of collective kind of strategy with our brand.
Nice. On top of that, is there so full disclosure, I'm relatively bullish in Trader Joe and the whole brand. I basically, as a retailer, I took on the whole journey. So I felt like you guys did a lot more things to become more successful compared to other decks. Obviously, you guys have your novel way of doing the LP, but in terms of strategies and everything, I think you guys did a lot more. Do you have any insight or thoughts or strategy that you think worked out, or why you were doing better compared to others of them?
Yeah, so I guess apart from the brand, it's funny because you still kind of see these tactics to this day, but our co-founders, so one of them, so we've got two co-founders, Murloc and Cryptofish. Murloc is like the shadowy coder who no one ever meets and you rarely get an engagement or contact with, right? He does the dev things, he does the building and the strategy behind the scenes. And then we've got Cryptofish, who took on the kind of CMO role at the start, did a lot of community growth, marketing, and part of his approach was also really helped reinforce our brand and what we were doing. That was personal brand. Right, he went straight onto Twitter. He started tweeting threads, all of this stuff, and that's so important for founders in early stage startup. Is don't just sit back and rely on your corporate account on Twitter or other types of social platforms. You've got to be in there, in the trenches, as a lot of people say. You've got to be engaging, interacting, building a community on the side, and distilling the vision of what you're building for. If you have a vision and a long-term ambition, you will be able to sell that to your early users, your early community members, and that's so important to get early traction, success, and mind share, particularly when the market is so cluttered already. Like, why do we need on Avalanche when we launch? Why do we need the 13th DEX? We don't need another DEX. So you've really, as a founder, personal branding is really important to help early traction and success and mind share. Like, alongside that, I think, apart from our brand strategy, apart from the personal brand approach from one of our co-founders, it's we just did things a bit different at product level as well. And that kind of reinforces everything in that flywheel of what you're trying to say and communicate through your brand. It links back to the product, and users experience that and they see that, and that's how they kind of sell into stuff. So some like small product differences that we had, like back in 2021, hold on. Some of the small product differences that we had was, custom front end. So for users, it was like a brand new experience. They're like, wow, this is different, because everything was like Uniswap back then. And so first impressions are, a user lands on our platform, on our DEX, they do a swap, they start to yield farm. Oh, it's different. It's similar, but it's different. And we're quite lucky. The product design team that we had back then, led by Murdoch, one of our co-founders, there was a lot of experience there. So we locked down our front end, so you can't fork it. We made sure it was different, and the quality and just the general experience was kind of top notch, and that helped us get that early traction on the product side as well as the brand and marketing side. And as I said, that reinforces it. Like, I don't know if did you use the DEX back in 2021, like yield farming?
Sure.
Do you remember, like, even stuff like you would claim rewards and you get a little ding sound? It's almost like it gives you a little kind of dopamine hit. Oh, that was kind of cool. I just collected some money and this ding went off, and it's almost like you're leveling up in like World of Warcraft, and you get that ding, and it's like, oh, I want to do that again. That was good, right? And so all these kind of little differences on our product, they all add up. And the ultimate thing is, as soon as basically someone lands on the DEX, they have a good experience. That emotional connection is created. It's reinforced through messaging, and that helps you get sustained traction. That helps you retain users because they feel like it's a great DEX to use. They want to swap there. They want to yield farm there, that's been really kind of important to that early success. And then it just kind of everything just reinforces itself over time.
Nice. Yeah. To be honest, like So to people who don't know, I started crypto around 2019. Trader Joe was one of the first team that made me feel like they had the execution in, let's say, more proper professional Web2 level, yet they have that degen touch-ish that makes me balance out and feel bullish. And obviously they were riding on AVAX hype as well, in my opinion. So they were the place to go to, and they had the right product to make me fall in love with afterwards, from a different angle.
The timing is it's one of those, like, when a lot of people say how do you strike success with X, Y, or Z product, and ultimately, you can look at this with meme coins as well. Timing really matters. Timing is almost everything. I think DeFi and then was a different story to what it is at the moment, but maybe we'll talk about that later. But timing is so important, and we kind of, even though we were late with Trader Joe on Avalanche, we were still kind of within that Goldilocks zone. So it doesn't matter. It's not necessarily all about you have to be first. As long as you're within that right kind of range of timing, you can still have success.
I totally agree. Like, there are a lot of products that couldn't survive to the turn, or they would survive until it was their time that jumped up, like Pendle, etc. Wanted to ask.
Yeah, no, most people don't even know Pendle were an Avalanche.
No, I don't actually.
Right, I think.
Yeah,
wait,
Pendle.
I think I've heard about that somewhere, but like, do you mind telling a bit more about that story?
Pendle, I remember. Oh God, the Pendle guys were great. I remember working with them with a Trader Joe. I've got a really kind of old, memey kind of illustration as well of our brand mascots, because they still have the same brand mascot, of course, slightly different style. but he was dressed in a pirate's outfit. I'll share that with you guys.
That'll be
It's really
interesting.
cool. And they produced that, and it was rare. Yeah, it was rare to work with someone who had their own team back then who would produce illustrations. It was kind of
Right.
yes, but their product back then was, I guess it was their V1, and it yeah, I think it's better a story coming from them, but there was a reason they created V2, and that was to kind of remove a lot of the complexities around their V1 product. It just didn't get as much traction as I think that they were hoping, and they kind of went into a state of rebuilding for their V2, and the rest is history. They've amazing team. Yeah. So the early I think that was like early 2022, I believe, in Avalanche, or late 2021.
Actually, now that we're on the product side of things, there was a question that I always wanted to ask. So for me, I'm more of a LP person than a swap person, unless it's full bull market. How do your team or you actually balance out, or how do you prioritize these things? Because technically, the better trading experience for the trader, the worse experience for the LP. And if the LP has more incentive, it's likely that the token or the trader suffers somehow. So I would love to hear your take on this.
It's funny because internally we're trying to, we want to reposition the DEX for traders. And in the back of my mind, I'm thinking, well, if we just say stuff like best rates for traders, LPs kind of think, okay, so is the yield crap?
But I might be a
Yeah.
wrong shill, right? But I think with your liquidity book model, you guys are in the perfect position to build a lot of grid trading bots and other trading strategies compared to typical LP models that can be a function for traders, but actually is acting as a LP without realizing, kind of thing. But
Yeah, I mean, how we're kind of building the decks as well is, we're looking at kind of broadening our stack. So we want to bring on board a club where we build the protocol, and that needs market makers. We're going to introduce a novel type of DEX protocol, so a BCAM, that's a bonding curve automated market maker. I will specify it's not a bonding curve launcher. It's a full AMM in terms of token creation and launching. So there's a full length bonding curve that's customizable to any type of size, and you don't actually need market makers for that because you have the bonding curve that gives you instant exchange at predictable prices. And then, we're also rolling out an aggregator protocol as well. So if we can't offer the best rates with our own liquidity sources across the different types of protocols, we'll always be able to aggregate external liquidity. So we're really focusing on, being less about yield farming or less about, enabling liquidity providers to extract high amounts of yield through incentives or real fees, and more into real users on chain that just simply want the best execution and cost efficiency on their swaps. This is kind of veering down how our DEX is evolving from this point in time, because back in 2021 it was all about the yield farms. How big were your yields? And we can offer 4-figure yields on liquidity book, but people don't want to do it.
Good times.
Yeah, good times. But can I jump in here real quick? Is that I think they're like I think I want to ask you about what the DeFi difference between 2020 and now. But what essentially you said was, I think it's because back in the days the trading volume was so high because of the limitation of listing, or the people want to front run listing, and we were in such a bull market, you did not have to attract traders, and you just need to enable the pair to be good enough to capture the traders that were already there. But I feel like because there's not enough trading, you have to add functions to attract traders or fight for traders for all this thing. Do you think this view is correct somehow, or?
I think there's a lot of variables of what's changed in DeFi compared to what it used to be. On our DEX, there's probably, I was looking at stats the other day, you've probably got 60 to 80% of the volume is just automated.
When you
It's probably closer to 80%. It's something like 75% over 2024 comes from bots or contracts that are.
When you say automated,
So it's not even the majority of that. Yeah, well, the majority of volume, or the minor amount of volume that's generated on dexes comes from real users. Most of it's just automated contracts arbitraging through sex dex or dex
I see.
dex. That's the majority of volume.
But I would imagine, do you think most of them
Got
are
it.
just arbitrage strategy, but not directional trading strategy bots?
I don't have that insight. I mean, it very much. I would. There's no way I can tell what types of strategies specifically, in terms of the proportionate size, what's coming from different types of bots deploying different types of strategies. But from the perspective of a DEX, what we care about is we care about all volume, but we really care about serving real users, and it's the minority of users on chain generate a small amount of volume across dexes, and that's across the landscape as well. Most of it is just automated in some level through bots doing different things across dexes, between sexes, or just like market makers throwing volume up and down.
So I just want to say that you just gave us a good segue there. I wanted to take a step back and get your take on the state of DeFi in AVAX, right? Because as one of the more dominant players, you have described sort of like what has changed since 2020, 2021, and now in the DeFi ecosystems. But with Avalanche itself, do you have any views or opinions as to why arguably it has sort of like lost its DeFi head start, right? Like it was definitely in the big three back in 2021, but now we are starting to see more activities even in Arbitrum, in Mantle, in other chains. Any opinions there that you can share with the audience?
Yeah, so DeFi back in 21, 22, a lot more concentrated than what it is now. You almost had seasonal approaches to where users were kind of focusing on. I started out in the fields of BNB chain, kind of farming there, and then eventually went over to Avalanche, and I know a lot of users who kind of went down that same story as well. And back then, it was quite a simple offering because protocols were much more simple in terms of what you could do on chain, and also with yield farming, it was basically just, one-click deposit and collect rewards every other day or something like that. And a lot more seasonal. So a lot of users were switching, to other chains like Phantom, and a lot of it originated obviously from Ethereum mainnet as well. And so for users just going back and forth across a few chains, you had a lot more of a concentration. You had bigger kind of cultural experiences built up on these chains as well that really helped to kind of build that almost like that chain brand moat. And you could see like, on various kind of social media platforms, how people were kind of leaning or positioning themselves to their favorite chain. It was I'd probably say it was a lot more tribalistic chain-wise than what it is now.
You're right.
These days you've got.
I remember. Well, I don't remember the last time we see hodl posts anymore, actually, on Twitter. And then it used to be like AVAX Maxi towards BNB. Like, why are you going there, bro? Like, it's like nowadays, like, because you guys are on Arbitrum and Mental as well. So, do you see that there's still this tribalism in terms of chains, or is people just liking your product itself, or like what's the cross chain deployment experience like so far?
Yeah, that's funny, Avax Maxi. You don't really see a lot of that.
I don't see new triangles in them anymore.
I love Avalanche. Yeah, there's less triangles than what they used to. I mean, Avalanche did have, for a period of time, a custom emoji. And I think BNB had that as well, and who else had that? There are a few chain custom emojis. They seem to be removed now, which is a shame. And I did, for a period of time, have that custom emoji in my name, that red triangle. And then I also added Arbitrum, like the blue heart. You see less of it now, and I think this is just a sign of ecosystem proliferation, right? So back in 21, 22, there was only really a handful of DeFi ecosystems you could be a user in, and you could join a wider community. Now there's something like over 300 chains, and I think like 150 of those have at least 7 figures of TVL, so they're kind of like viable chains you could probably go to as a user. Although I think bridges are struggling to keep up with linking all these different chains. So the point I'm trying to make is that dilutive effect of more and more ecosystems kind of impacts culture. It dilutes the cultural kind of significance. It tears away at the moats a lot of these ecosystems had previously kind of built up with their community standing, with their loyalty, and a lot of the legacy ecosystems are still really strong to this day because so many users naturally will, if they have a good experience over a prolonged period of time, they'll remain as a core community member there. But today it's so easy to go to Arbitrum, it's so easy to go to Mantle, and there's a lot more being offered for users. The attention cost for a user is probably one of the most parabolic graphs you could look at. I've never seen anything, or someone tried to pull this together, but the cost to get a user onto your chain is just up only, because everyone's competing to get the users here. And the problem is exacerbated by I don't have stats for this either, but there is definitely limited inflow of new users coming on chain.
I was actually telling Marco about this, is that I love it when chains compete, because like right now as a yield farmer, even single deposit lending gets me like 10% plus on stable coins, just because like Say needs to be better than Base needs to be better than, and then everyone's just competing. You see the APR just like because like, I mean, as a protocol designer, surely you just mean, oh, I need to beat them by a few percent, even though if it's just a week or two kind of thing. So like it's good for me, right? I love it. But like, how do you choose? Yeah. Just
sure.
Just like Uber and all those stuff, right? Like, I love it when they fight. Like, I remember a time when I was ordering Uber Eats and stuff like that. I was just picking whoever gives the most incentive and the free food, right? To be honest. But yeah, and that's why I'm fat. But I wanted to, like, as a builder, how do you choose? As a builder, how do you choose like where to go, what to go? Like, is there like metrics that you see, or is it a bit like us? Like I farm points and potential airdrop and stuff, right? I kind of base on my gut feel. As a protocol builder, I'm sure there's a lot more in stake for this. So how do you see things, or how do you plan things out, like in general?
It's Trader Joe. We haven't taken the typical approach that a lot of other dexers have and just kind of gone everywhere. Now, don't get me wrong, particularly when we launched Merchant Mo with Mantle, we're really happy with all of that. But the amount of ecosystem that came to us saying, can you create something on our chain, and all these different names. Everyone wanted a Merchant Mo vibe.
Blue is low-key flexing,
Seriously. And ecosystems will basically give you really sizable grants. They'll give you liquidity backing, and these are really important for dexes, because it's not just a case of you deploy your dex and people start trading and bring liquidity, because we know how difficult it is to pull in that liquidity initially from users. We could offer 3 or even 4-figure yield, and it's so difficult to fill pools with adequate liquidity that is meant to support an ecosystem with access to different tokens. It's so hard to do. So you need all these things like liquidity from central foundations trying to build the ecosystem, grants to help you scale up the team to accommodate and develop. All the differences, it's not just easy forks. There's more to it than that. And with Mantle, Merchant Mo is built to cater more towards what they kind of wanted to see from that core primitive within the ecosystem. So there's all kind of like nuances to it. And yeah, it was really we're generally just really happy with how Merchant Mo's gone, and we really like working with the Mantle team. But it's so difficult for us to be like, where are we bullish? Well, we're not sure. Should we grow here or should we try and grow here? We tried with Trader Joe to go to BNB chain. We tried to go onto Ethereum mainnet, and it didn't work out for whatever reason. And I won't get into that, but we pulled back from those chains.
But like, I guess I guess from a chain point of view, you're a bit like a yield farmer like me as well. You figure out what's the best move, and obviously, you want the chain to success. Like whichever you deploy, you want the chain. You're essentially betting on it, right?
Yeah, our whole brand is to have high conviction in the ecosystems that we're there. We like to build communities. We like to build with the existing with the existing teams that are building there as well, and definitely we like good relations with foundations that are building the chains as well. So we don't want to pick and choose a bunch of different chains to go on and just deploy and be like, here we go, see ya. We really want to work with every different level that's building that chain, and we only want to go to chains where we really think can be there for the next 5 or more years.
Yeah, I mean, like in general,
and that's why we're only on 3 chains.
I mean, in general, you guys always has the best support, like from the Operation grants to the AVAX boost, and obviously from the mental points and etc. Like, is there any? Obviously, you guys are A-class team. Is there any like special sauce for any new builders out there to navigate or get the most out of ecosystem program, you think?
Oh, good question.
Assuming you're not Trader Joe or Merchant Mo, by the way.
So, and I mean, a new DEX that's kind of deployed. Well, we're lucky. We've kind of sailed off the early success that we have. So, we're now the pivotal DEX on Avalanche. And we've worked with people building Avalanche for years. With Arbitrum, we've got a good footing there, despite not being native. But that's a different approach to building, because that's all funded by the DAO, the incentives that we've got there, right? So that's a different makeup entirely, and how you navigate those seas to success is going to be different from a centralized approach at building a chain, where foundation relations do matter. They do matter in Arbitrum, but not as much as having a good standing and mind share and evidence of network effect that the DAO like to see on Arbitrum. With Mantle, it's kind of similar to Avalanche as well, a central foundation that's building a chain. So, it really depends as what chain you're going on as a DEX. I would say the amount of ecosystems there are, maybe there's opportunity for a DEX to go on a relatively under the radar DEX and try and get good relations with foundations. What foundations love when they're building their ecosystem is a DEX that's going to be committed to it. And that means, having good similarities with brand. That means evidencing, showcasing solid kind of relations and community building efforts, because that's the hardest thing a chain can do at the moment, is build a chain community. So if you can demonstrate that, hopefully that will be good relationship building with a foundation, and then you can kind of, work your way into that level of network effect where you become integral to that ecosystem.
That's some free consulting right there for the listeners. But I want to ask you a few investor-related questions, but I want to take a step back. So I saw that, as you said so earlier, that you guys have a lot of products. You have the NFT marketplace, you have the staking, you have the core DEXs. And I think we're starting to see that more and more DeFi protocols are vertically integrating, right? So like, I think back then in 2020, 2021, pretty much, you have your just AMMs, just lendings, just staking. And now we're starting to see one protocol is combining everything under the hood. Internally, we even have this observation, sort of like, it seems that outside of ETH, like for instance, in like Solana, that happens a lot more. In ETH mainnet, it happens less, but in L2s and in other chains, it seems to happen a lot more. Do you have any opinion on how you're sort of seeing this trend? Is it part of your product strategy in terms of growth? Do you perhaps plan to own more of the user stack? We even see folks like Aave buying wallets, right, to own the entire flow, basically. So just want to hear your opinion about that.
Yeah, it's interesting. I don't, I'll say outright, I don't think we're going to go down the wallet route. That's like the big boy play, I think. The Uniswaps, the Aaves.
Right.
Of what it is, a big undertaking. What we tried to build, so we did try to build almost like horizontally that one-stop shop experience where we've got these different protocols and we're stitching them together into almost going down the route of being a super app where you come to the Trader Joe platform and you can do pretty much every different type of thing within DeFi. I think how we view the DEX space now is, I think some DEXs are taking that they want to be the everywhere DEX. They want to go to every single ecosystem and chain and always have some presence there, always be able to offer different kind of native tokens on these different types of chains, and then maybe link them up with future interoperability solutions where it's a bit more seamless to what it is at the moment. Other DEX is taking that infrastructural play. They're kind of going backwards almost to be a really core founding primitive and just try and focus on builders and different types of protocols, even different types of DEXs building on their platform. And I think that's interesting as well. For us, we really just want to hone in on almost like competing directly with sexes. We want to be a sex on chain, basically. We want full 100% on-chain solutions with absolutely everything. And we believe that blockchains are becoming more performant, and we're going to be able to roll out a DEX that competes with the experience of what a centralized exchange can do. So we are building more types of DEX protocols. We're aggregating them all together. We always want to be able to offer the best rates. And we're going to continue building novel products as well because we like doing that. So we've got Token Mill, which is our next novel product coming out. We think that's going to be really interesting. And then, as blockchains become more performant, clubs are just heavily intensive on gas and as a result cost. So you do see some operating at the moment, but those will be in their own dedicated block space. We don't want to go to our own blockchain, certainly not yet anyway. We want to play where the biggest chains are going to be. It's like there's 150, 300 chains at the moment, but where are most of the users? Just contained to a few chains. And that's not going to change going forward. There could be 1,000 chains, but there's always going to be core dense hubs on the biggest, best blockchains that have got the most diverse array of builders, most diverse array of protocols, and maybe that's going to be tech driven in the future, and we're going to take bets on that. So that's why we're kind of building a club now, because we think it's going to be, really viable as part of a wider DEX experience. Our focus is really just kind of building almost like one page. Trader comes, they perform a trade, that's it. Under the hood, there's a multiple array of different DEX protocols aggregated together. Users don't really know what they're interacting with, but all they'll care about is that they can access the token and it's cost effective. So that's kind of where we're building our DEX experience, certainly over the next year. 6 months.
If you don't mind me jumping in on this, it's first I want to add a little bit of I'll add a little bit my thoughts on what I consider of the DeFi DEX space, right? So I think in terms of innovation, people are going for like Uniswap tried wallet. Personally, I don't think that's working very well. So I think not going the wallet route is good because it's just too much focus. Second, they are trying to be the platform which is doing the hook. I don't know how you think about it, but I think it will fragment the liquidity. It will fragment the focus as well. But if it does work out, it will make sense. But I think with the current trading and the liquidity right now and the multi-chain thing, it's very difficult for hooks to bootstrap liquidity and bootstrap trading volume. Love to hear your take on this later. And the second bit is they either innovate on the efficiency or aggregation of the liquidity and providing a better trading experience. Like is it Elixir, and also there is Stake or yeah, like basically you do private market makers under the hood, or you aggregate all the liquidity. And then there are ones that do more interesting, essentially like VE32 decks, where they innovate on the tokenomics model to keep people in liquidity, to build there and use BD strength to list more tokens, or list smaller tokens, multiple small tokens, to build up that trading volume. But so overall, I think there's a few things problem with it, is because, like you said, most trading volume right now are not in alts. We're not in the alts market, so this approach does not give the edge. But will that change when alt market come back? I don't know. Hooks might be too fragmented, but as a platform, that works out as a very bigger play. Wallet, I feel like it's just too far, and I think aggregating trading source to provide better trading experience, it's the way for it. And when I say trading experience, to be more specific, is to facilitate automatic trading strategies or arbitrage or API trading, but not retail or other people just purely trading directionally. But I don't know, is that a good summary of what you said with more context, or just my take? Keen to hear your thoughts on this.
Yeah, no, that's a good summary. And like ultimately, I think all of these approaches are built on their own merits and are, potentially going to be successful within their own arenas. I think without going into specific names and stuff like that, I think with I don't want to just...
Sorry, like okay, I won't be a dickhead. I was gonna ask you to say it, that I'm gonna bait it out of you, but like
I could be really unhinged and just give my actual like views and thoughts with things. With Trader Joe, yeah, we see our path as best, connected to our brand strategy. We're just all about serving real users, and that's our focus. And I think all these other focuses, directions, and how they're building out their platform is just a sign that the DEX industry has gone from just being almost like a yield farming place and a simple token exchange a few years ago to now we are seeing genuine new paths being taken by what you would call a DEX. And some of these are just basically just turning into like invisible incentive hubs, supporting economies within a dedicated chain. Some are going down the infra play and just relying on other builders to kind of carry on building on their stack and taking a backward step. And then, so how we see it is, we're just all about focusing on real users, on big chains, and that's the approach we're going to take. And
Right.
well, it's going to be interesting in a few years to see what's really worked, what hasn't. Ultimately, the general experience of accessing a DEX on chain is going to be absolutely paramount to future success of DEXs as well. So I definitely agree with, we don't have the resource to build our own wallet and support that. We're a team of about 20 builders, about 25. We would probably need to triple our team if we really wanted to take on and build our own wallet. Or I'm sure if we acquired a wallet, an actual wallet, they would have at least twice the size team that we've currently got. That's not within our scope of being a possible area that we can develop down. So we're not even going to attempt to do that.
I know.
That said, I do think a lot of smart wallets are really just going to radically change how users come on chain and interact.
There's this Say wallet. I'm not gonna say which one. They got hacked, but there were only 50 wallets got compromised. So I think wallet space is extremely competitive and expensive to develop, and it's one of the things that is winner takes all, and is very tough to build. But yeah,
it's very, very tough. Yeah.
Yeah. I met someone at UCC actually. Again, I'm not going to name drop because I don't want to put them in a bad light, but I was just astonished at how they were surviving and the size of their team and the activity of that wallet on that chain as well. It's like, what? How is this viable? I don't know.
But you're talking about the burn rate and stuff like that. Yeah, it happens a lot.
Yeah, exactly. No, we're gonna sit back and adopt the the tech by the great builders of wallets of interoperability solutions like Layer Zero, big fan
Do
of
you
their
know how
team.
they survive?
That area, that side of DeFi.
They survive because
Layer
investors
Zero.
like Marco, they fund innovations. They fund. So any good builders think they can build a good dream, feel free to DM Marco with your pitch deck.
Are you talking about the wallet companies? God damn it. Okay. So no, man. I mean, like, thanks for the run through, Blue. I want to try to see if we can wrap this up with the $1,000,000 question that I think our listeners are going to be very appreciative. So I think it's fair to say that Trader Joe is one of the more established DeFi protocols out there, right? Amongst maybe like the top 10, 15 most known DeFi brand names out there. Recently on CT, we have been seeing a lot of like people shilling that it's DeFi is going to make a comeback. A lot of the liquid funds are longing like the OG protocols, like the big three, like Aave, Maker, and stuff like that. From the perspective of an operator on a, again, fairly established name, but and you have your tokens. It's been around for quite some time. You're not like one of those like low float, high FDV tokens. How do you sort of see, or like what do you think it would take for this narrative that's currently being pushed to actually take place? Like, how do you see the tokens, I guess, which includes your tokens and these other more OG DeFi protocols, can actually make a comeback?
Christ, that's a hard one.
For the readers that don't know,
I did want to make a comment earlier.
To jump in, for the listeners that don't know, Trader Joe's token is actually fully diluted. Feel free to listen carefully.
Oh, there we go. Yeah.
I'm not sure if I can shill my token.
Yes, you are.
I might have to put a on it. I mean,
this is not financial advice, but yeah.
I think from my view, this is quite a simplistic view, right? But from my view, certainly a lot of the OG DeFi projects have, almost everyone has this kind of similar fundamental chart where you look at incentives and they were just sky high, 21, 22, even entering into 2023, and revenue was like nothing, right? So earnings look terrible on the majority of OG DeFi projects, whereas now what you're seeing is incentives are just grounded with a lot of these protocols. There's almost no incentives, and revenue has been ticking up across a bunch of different OG protocols that are almost at the end or at pretty much the end of their emission cycle. So what you're getting is almost like a realization from builders that actually you don't need sky high incentives. If you've got foundational roots within your ecosystems that you've been building, you've got sticky liquidity from established players that trust your protocol, you don't need to distribute a ton of incentives, right? Yield can be sustained through natural organic sources. And this is resulting in a lot of these protocols that are having earnings kind of start ticking up. Revenue is picking up as DeFi activity does start to pick up. And to be honest, a side comment here is it really doesn't feel like there's ever going to be an alt market of sorts. But DeFi is foundational, and people understand that now, and people trust the established players. And what you're getting is changes in these fundamental graphs for a lot of these protocols, Trader Joe including, but not financial advice. Our token is fully emitted. We barely have any daily emissions whatsoever, because it's fully emitted. It's not fully circulating, but it's largely all fully circulating. Now the teams are just focusing on, okay, how do we build new revenue streams? How do we build more value back into these tokens, which a lot of them are, in some form revenue sharing. And so I think, with Trader Joe, what we're doing is that's what we're focusing on. How can we increase revenue in certain areas to start to drive more value back into that revenue sharing aspect of our token? And I think that's what a lot of other DeFi projects are kind of doing as well.
I want to chime in a bit on my thoughts on this. I believe if we continue to go into an alt market that is very shit, like Arbitrum-ish in its early days, tokens like GMX that was fully diluted and continue to work will become I think people forget about the reflexibility of altcoins sometimes. Like, everyone wants an altcoin and everyone believes in altcoin season. Just because it's not here yet doesn't mean it won't go 0 to 100 real quick. So I think when there's no buy volume in general, right? But when it comes, they will come in exponentially. So and I think all the fundamental, it's a narrative to push that when something happens, and when that happens, it will come.
Yeah. No, you're right. Yeah, and that's typically always how it's happened as well, although past performance is never guide to future performance. But yeah, it stuff normally plays out in a matter of weeks, right? And it's just about being positioned and believing in the protocols and projects that you personally want to back.
And yeah, is there anything you want to ask Marco? If not, maybe I think this will be basically our first interview session, and I would like to thank Blue for your time. Before we end this session, I would love to ask you, what do you think is required to make it in crypto to end the session? You can read it yourself as trader.
Oh, that's another hard one, man. These are hard questions, dude.
Bro, you know, like
really sapping down on everything I've got. My day is only just beginning as well.
It's gonna wake your brain up, man. Yeah.
I need a nap after this. What does it require? Well, like from I guess
any angle, as a builder, trader,
from
whatever,
what perspective?
anything. Just your first take. What does it make to?
Oh, easy. If you are in any form building in Web3, in DeFi, build your personal brand on the side as well.
Fact.
Personal brand is so important in this space. But yeah, for sure. Like, it helps to amplify everything you're doing with whatever established project you're trying to build. Build your personal brand, network. If you go to conferences, don't go to the main conferences, do the side events. But yeah, just take the time. It's unscalable to do, like building a personal brand, but always take the time out of your day, every single day, to just connect and network with people, and build your personal brand. It pays off in the long run for sure. And that's a regret of mine. I didn't start doing this until, I don't know, a year in my role at Trader Joe. I basically just ignored my personal brand entirely and just did Trader Joe stuff. But now I do put a lot of effort into my brand, and it's been so helpful.
Oh, and there's a story behind a cat.
Awesome.
There's a story behind his cat. But I think we're up to the time today. Maybe we can do another chat another time. Yeah, thank you, Blue Bro.
Thanks,
no
man.
worries.
Anything you want to shill to the listeners with about Trader Joe?
Oh,
Another hard one.
yes. But, so I mean, God, my brain's frazzled already. So as I mentioned a couple of times already, but yeah, we just released our product roadmap. It's pinned on the Trader Joe X profile, and you can kind of see what we're up to over the next couple of months. We've probably spent the last 6 months deciding, ideating, and kind of designing what we actually want to kind of build on and focus on. And it's all coming into the last kind of few months of the year where protocols are built. We're establishing our go-to-market, and we'll be launching a lot of stuff in kind of quick succession. And we're kind of announcing something new in a couple of weeks, and then also, I guess the next chain we're going to expand on to as well. We're really excited about this one. So there's a little bit of alpha that's coming in probably start of October.
Okay.
So we are going to go to.
Is that chain live already? Okay. That's a wrap.
Hold on, what?
That's a wrap. Thank you, Blue. Thank you very much. All right.
All right, that's a wrap. Thanks all.
Stop the recording.
All right, I'm gonna click.